Good morning, and a warm welcome to all of you to Keysight's Analyst Day 2023. My name is Satish Dhanasekaran. I'm the President and Chief Executive Officer of Keysight Technologies. Have been in my role since May of 2022. I've been in the company for 17 years. But one thing I must say, in those 17 years, very few people go past my first name, as you can imagine. And Jason Carey happens to be one of them. He consistently tries and gets it close enough. So I've been in the technology sector for 25 years. Started in my career as a design engineer at Motorola, designing handsets, and therefore, as a customer of a number of tools that we make today, have interacted with the firm through all those years. And I've always been impressed by the collaborative culture and the innovative thinking that Keysight employees bring to the marketplace. And I joined the firm in 2006, and I continue to be amazed by the work we do at Keysight, and equally by the breakthroughs we're enabling in the world of technology. And before I get into the slides and get started, I want to maybe make some opening remarks a little bit more around my career. Through my career experiences at Keysight, I've led the wireless business, led several successful transformations, including the wireless business, where I've taken the business to a market-leading position in the role of GM. I have also drove a 900 basis point operating profit improvement as the president of CSG in the 4 years I held that role. And most recently, as the chief operating officer of the company, have been responsible for leading the operations of the company through the pandemic and also successfully navigating the supply chain situation that we faced and continue to deliver strongly. Keysight has had a great strategic direction since spin. Our founding CEO, Dhanasekaran, put together a software-centric solution strategy, which the leadership team and the entire company embraced, and that has resulted. This strategic direction is just getting started. We see many more legs of growth and opportunity to create value for our stakeholders. And myself and the leadership team here are very excited to continue this journey, and we hope to tell you more about this today. Before I get to today is all about the future, and before I get there, I want to acknowledge that the macroeconomic uncertainties in today's environment have caused some of our customers in select markets to pull back in response to this current situation. We delivered a very strong Q1, 10% revenue growth, and very strong EPS growth in the quarter, and reflected this uncertainty into our Q2 guide. So that's a little bit about what I'll say about the current situation. But I want to say, like, our philosophy and our mindset is to run the business to create value. We're here to maximize under all conditions. When times are good, you've seen what we have done on the upside. These are different times, and we're going to continue to drive to provide upside from a business perspective. And we have great customer relationships and ways to do that. With that, I wanted to then focus my presentation today on the long term, and really excited to be here to give you an update on the business, talk about the progress that we have made as a company since 2020, since we were last here, and then talk about those long-term, decades-long secular growth wins or tailwinds in our business that are underpinnings of growth, and equally important, going up the technology stack vision that I have for the company to create long-term value for all stakeholders. So with that as a basis, let me get started. Keysight today, $5.4 billion global company, market-leading position in design and test. We further strengthened in the last 3 years our share position in this attractive market. We have 15,000 employees globally that are located near customers, and we have a strong financial track record here, as you can see, and also a track record of value creation. Since spin, Keysight has tremendous amount of value creation opportunities across its diverse end markets, and those end markets are key for us to create value. The fact that we have exposure into commercial communications, aerospace and defense, and industrial end markets gives us the diversity of the end market applications to go for. The one other point worth making about Keysight is that it is an enduring business that's been around for over 8 decades. And throughout that time, if there has been one fundamental driver that creates value, it has been perpetual changes in the world of technology. Well, you can think of 2G to 3G to 4G to 5G to 6G, and who knows after that. There's one thing we can count on is change. And throughout that time, we've been able to embrace that change and go ahead and drive value. Our software-centric solution strategy gives us a bigger opportunity to create greater value for our shareholders as we move forward. But we remain, as always, purpose-driven and future-focused. Our purpose is to accelerate innovation, and we do that by offering total solutions to customers to enable their engineering workflows and give them a distinctive advantage from a time-to-market perspective. From a future-focused perspective, we're focused on diversifying our end market exposure, expanding our customer base. As I mentioned there before, we have 30,000 customers, and we keep adding more customers to our platform. And we're evolving the business mix from just products to higher value solutions, which has the effect of growing software services and recurring revenue over time. Also worth highlighting, the strong free cash flow performance in the business. Keysight has had a history of maintaining and sustaining and nurturing its deep, long-term customer relationships. And today, I would say the relationships with Keysight's customers are increasingly more strategic than transactional. We serve 30,000 customers worldwide across these 3 diverse end markets. And what a way to serve them than be organized around them. We have Kailash and Wee Sin really focused, and their groups really focused on these end markets, commercial comms and aerospace and defense within our communications group and electronics industrial group that Wee Sin leads, and you'll hear more about the plans we have for these customers. By organizing ourselves around our customers, we get to understand where they're going, we understand the market insight, and then we're able to take that and deliver first-to-market, high-value solutions that creates value over time. I've spent a lot of my career at Keysight from the day I joined in customer-facing roles or interacting with customers. And what I continue to hear from customers is the level of complexity of technology that they're dealing with remains very, very high, and they're challenged by it. The speed at which they have to move, or time to market, is another critical challenge for them. So as a result, our software-centric solution strategy is much more relevant today to them than ever in the past. And so they're seeking deeper, longer relationships with Keysight or collaborations. And I view this as a very favorable trend in the business because often we're engaged with customers years ahead of when even their products have to be rolled out, or years ahead of when even the products get commercialized and when consumers or businesses see it. In the recent 3 years, through the COVID pandemic, we've sustained and collaborated publicly with 140 customers, and you see those press releases, and they are all here to inform the future direction of where innovation is headed. You'll hear from Mark Wallace, who have recently has taken over the additional role as the Chief Customer Officer of the company to really see how we're going to scale these customer collaborations to create greater value. This is a great chart about the compounding value creation we've created since spin. We've nearly doubled our revenue, growing at 10% CAGR, and tripled our earnings per share, which has been growing at 17% CAGR. But equally important is how we've achieved it. Our relentless focus on making our customers successful has enabled us to identify those opportunities to complete their workflow and therefore outperform the market. We've also focused on higher value opportunities. Software, services, solutions have been a bigger part of the mix, which has resulted in growing our gross margin over time. And I know we're not done on the gross margin line. We've been held at 65% by the higher inflationary environment, but we're continuing to push forward. We also maintain higher levels of operational excellence in the company. We leverage our G&A footprint, and you can see that once we have gross margin, we're able to convert that into operating profit, and you've seen that us deliver over 29% operating margin performance in the business. Very strong free cash flow growth of 18%, and we remain very confident in the long-term cash flow performance of the business. Since we were last year in 2020, we made some commitments around our expectations for the business in terms of revenue growth, operating margin, and earnings per share. And I'm happy to state that we've exceeded on all these three fronts. From a revenue perspective, we continue to capitalize on what we believe are decades-long innovation trends in the end markets and focus around our customers. You may also recall we've had to navigate pandemic effects, supply chain challenges, and many geopolitical challenges, which included losing a large customer in China due to geopolitical trade headwinds. Despite that, we delivered an impressive 8% above-market growth revenue and a 500 basis points improvement in the operating profit of the business and an earnings per share of 17%. Based on the confidence we have in the free cash flows, we also returned 64% of our free cash flow, or $1.9 billion, to our shareholders from 2020. As I'm excited about the results we've produced, equally important to me are the actions that we've put in place since 2020 that continue to give us a runway to grow our value over time. And they fall in three buckets. First, it's about growth. It's continuing to see where customers are going, where industry is going, and continue to feed those decades-long growth opportunities through our organic investments in R&D. That continues to be the focus for the groups. And you'll hear from Kailash and Wissam when they present an update on where things are with 5G, where things are evolving, where is 6G, automotive, and quantum computing, semiconductor, all of those big megatrends that we've talked about. Equally, the new areas of strategic importance for Keysight. So we'll look forward to share that with you today. On the margin front, we're focused on expanding our margins, and software and services and lifecycle value capture become a bigger theme. Equally important, maintaining our operational excellence as we grow and scale the company. So you'll hear more on those two fronts. Our culture has been a source of competitive advantage, and you'll hear more from Ingrid later about the work we're doing to heighten our customer centricity, build out our software-centric culture with tools and processes to enable our employees to scale the software beyond the $1 billion levels that we have today. We're also making deeper commitments to sustainability, diversity, equity, and inclusion by integrating that into our business strategy, something that we have done quite a bit of work on, which you will hear more about. So again, I would say there's a lot of actions in flight that give me tremendous confidence in the value creation possibilities with the business long term. This is a slide that points to, you can look at the 2015 market opportunity for Keysight, which was largely a hardware-centric tools market at that point in time. You could say roughly $13 billion. But as we've progressed our software-centric solution strategy, we have spoken to our customers, and we have expanded what we do for them. You've all heard about the software layers of test opportunity, where we've entered the protocol space and grown our SAM. And with those SAM growth, our markets have grown faster as well. And so today, we are at $5 billion business, roughly $5.4 billion in a $21 billion SAM, and with roughly 25% market share, with plenty of opportunity for us to grow and take share. And so I'll make 2 points today. Based on what I see are the long-term drivers that are happening in our end markets, which I'll cover a little bit later, we see our growth rate expectations for our markets going up from the 3 to 5% to 4 to 6% moving forward. And then, consistent with what we've always done, which is expanding our SAM and getting into new markets, we have identified 4 attractive adjacencies that we have an active pilots in, that we're continuing to foster and nurture for an additional $5 billion new SAM opportunity for Keysight. And all of these fit our strategy to be software-centric, whether it's the software test, network analytics, which is a logical extension to our O-RAN portfolio today, data management, which is what our customers want us to do more of, give them insights along with data. And then the system simulation and emulation opportunity is very attractive to Keysight as well. So what are those favorable long-term innovation drivers in our marketplace? So I would say they take 3 forms. One is the technology trends around computation, connectivity are only increasing. And we have all seen the exponential rise in data that has resulted in the networks of in the last decade needing to be updated in technology, and data centers and clouds needing to be updated, which has resulted in good growth for Keysight that we have all benefited from. I believe we're on a cusp of another inflection with AI/ML. With the recent public releases of ChatGPT and natural language processing algorithms and how real they are, it gives us a flavor for where things could get, not only in the consumer realm, but also in the business-to-business and automation realm. Semiconductors are becoming much more strategic for our customers, and so not only traditional semi players, but we also see many system companies vertically integrating their semiconductor strategy. We see industries that are transforming. You've seen us in 2013 see this EV, AV inflection come in and take a very small position at that time that we had and grow it to $500 million of sales in the most recent fiscal year. We think there's decades-long opportunity with semi moving forward, but we're also equally excited about the opportunities in digital health and space and satellite, which are inflecting for us, where we have small but material revenue today, but faster growth opportunities moving forward. Technology is going to be a bigger driver of global GDP. If we're sitting here a decade from now, it's definitely going to be higher and bigger than what it is today. Governments around the world are recognizing it, and they're investing in organic IP, and you'll see that reflected in our presentations today around government research or research opportunities for Keysight. Our complex technology stack that we have in the company is a great fit to enable a lot of this IP development that's happening around the world. With today's geopolitical environment, defense modernization is a priority in the United States and with its allies, which we think are favorable. Onshoring and sustainability trends are here to stay and accelerate. So given the technology trends, transforming industries, and market dynamics I see in our end markets, I remain confident in the 4% to 6% market growth rate potential for our end markets. So how do we achieve this? We have a consistent software-centric solution strategy. Our focus has always been to be first to market with solutions to create lifecycle value for customers. We're relentlessly focused on time to market needs and productivity needs of our customers, which we believe will create stronger business outcome for Keysight, including profitable growth, margin expansion, and resiliency in the business. Let me now go into how growing our software content and solutions content has actually taken us up the technology stack. As we spoke to you before, our focus has been around our customers and their workflows, and we have been enhancing our contributions we make to them. And by doing so, we've gone higher in the stack, from the physical layer to the protocol layer to the application layer, making ourselves more relevant to our customers today than we have ever been, and we intend to continue that progression moving forward. At the heart of our portfolio is the business that spun out of Agilent in 2014, the physical layer tools or instrumentation business, which continues to be 70% of the business. We continue to enhance the differentiation because of our R&D investment, and this continues to be the foundational part of our business. We've taken a very small presence in protocol at spin through the acquisitions of Anite and Ixia, combined it with organic capability, and have now grown it to 25% of our revenue of the company, and it represents 50% of the software that we have in the company. Again, going up the stack, making us more relevant to customers. And as we continue the progression, we see even more attractive application areas for us to, while it's still 5% of the revenue roughly today, for us to go further in. You'll see very powerful examples of the work that we're doing in physical layer, protocol layer, and application layer outside in the demo areas, hopefully pointing to the richness of the 7,000 products and the many, many solutions that we have and the different diversity of the applications that we serve. The physical layer is an area where our focus is. We have undeniable market leadership here. We invented the category of tools. You can think of the spectrum analyzer, network analyzers, oscilloscopes, AWGs, BERTs. Those are the tools, and every electrical engineer needs them. And we invented many of these categories. And our focus has been to grow our differentiation. We want to find the highest performance capabilities that we have in the company and go ahead and use it to solve the most complex measurement challenges across analog and digital domains. That's our strategy here. And if you look at the physical layer designs of our customers, they're getting more complex because they're having to design their hardware for higher data rate applications, which means they have to go higher in frequency. We've long talked about the unique technology stack that we have, which makes our differentiation go higher as customers' designs go higher in frequency. If you want to pump more data into an existing telecom infrastructure or data center infrastructure, you'll have to go for wide bandwidth technologies. And again, there the measurement challenges get more complex. So we're going earlier in the cycle, creating products for our customers that are first to market and differentiated, and we're able to make unique measurements for them that give them an advantage in terms of benchmarking their designs, and therefore they gain a time to market advantage working with us. A great example of this is the UXR. We talked about the UXR here in our 2020 Investor Day as an oscilloscope platform we launched with unprecedented levels of performance. And 5 years since then, 5 years after this product is launched, it still continues to be the only measurement platform in its category that's able to do a lot of the complex measurements that our customers need to be done. So highly differentiated over a longer period of time. But how did this happen? Well, it's one thing if we looked at this as a hardware tool that customers need. But this transition that I talked about that we're on to becoming more of a software-centric solutions company has enabled our sales force and our go-to-market engine to take this as a measurement platform and position it for a varied set of applications, starting with wireline technologies, 400 gig, 800 gig, 1.6 terabits, moving into 6G, and then moving into some wide bandwidth data capture and analysis applications in aerospace and defense. The UXR continues to give us accelerated growth and higher margin than the weighted average of the company because of its differentiation and uniqueness in the marketplace. And as we think about the physical layer portfolio, that's our focus, is to continue to transform what was purely a tools business or a hardware testing business into a much more of a design tool that enables customers to go faster. The protocol layer, we've talked about moving up the stack. We took positions to enable 5G and the wireline protocols to design and test them. But here's another example of a fast-growing application with high software content that we have, which positions our portfolio to be even more unique. Our channel emulation platform that you'll see on display outside is an example of that. Today's communication designers have to design their systems and signals to operate in a wide range of real-world conditions. One might say you're in a high-speed train. You might be in a plane, and your Wi-Fi has to work in a plane where the plane's going at a fast rate. Or you might be in a stadium environment, which is highly dense environment. Or you may have to communicate to deep space. Or you may have to communicate from under mine applications or underwater, if you will, if you're in a submarine. So all of these give you a different level of complexity associated with the communication systems. Well, someday it might be possible for an engineer to take a rocket and go to Mars and test his design. But I think in lack of that, what we have decided to do is bring more of that realism into the lab of our customers. So our best-in-class emulation platforms that we have in the company enable us to do just that. And the level of realism that we're able to bring to our customers in the lab enable them to solve problems earlier, identify, and solve problems in their design earlier in their design cycle, giving them a real distinctive advantage. And we don't innovate in isolation. We're working with the likes of AMD to bring their technology with our technology to put these platforms together. The application layer is another attractive adjacency for the company. And one key example here is in our system simulation business. We have a core position of leadership in the RF design automation business. You'll meet Niels Faché, who's out here, who'll speak to you about that. And every RF designer who uses components or power amplifiers or duplexers uses this software to design their circuits. But we're now going higher in the stack because our customers want more system-level capabilities in their simulation environment. And we're going higher, and we're providing them that. One of our customers asked us IP management. It's great they do simulations, but how do they manage the output of those simulations, and what does it tell them about where the designs are? I think giving them those meaningful insights is what customers expect, and that's exactly where we'll continue to expand in. So I hopefully gave you a sense for what our software-centric solution strategy has done. It's given us 3 powerful vectors for growth, starting with the physical layer, where we are transforming businesses for faster growth and better margin profile as we heighten the differentiation with a focus on higher and more complex applications. More software-centric applications by leveraging our IP for a broad range of customers in the communication design marketplace with the protocol layer expansion, and the application layer remains a greenfield opportunity. We've identified a few adjacencies that we intend to pursue. But having the physical, the protocol, and the application layer as a holistic portfolio offering to our customers enables us to complete the workflow and position our portfolio for greater differentiation and value creation over time. What gives me confidence that we can actually execute this strategy? It's at the center of our Keysight leadership model, the relentless focus that we have as a company on enabling our customer success. The values of the company, the incentive systems in the company reinforce that, but equally our focus on identifying those market insights. I talked a little bit about how we're organized as a company around our customers that enables us to get that differentiated outside-in perspective, which we're then able to convert to go ahead and deliver those first-to-market experiences. Let me now go into and double-click on each of what I consider sustainable competitive differentiators for the firm. The co-innovation model that we have with our customers is a big one, because it often gives us a pipeline of opportunities that we're looking at based on collaborations we've had in the last 3 years that gives us tremendous confidence in our business moving forward. And you can look at what customers value about Keysight. It's the deep technology breadth, the multiple domains of information, whether it's physical, protocol, or application, they can get by working with one company versus having to do it themselves or having to go and piece it together by working with multiple players. I think this time to market focus that we bring through our co-innovation model is very unique and distinctive. For the longest time, we've had a focus on Keysight Technologies. We have a Keysight Technology Lab, which has been an offshoot of HP Labs. 5 decades of continuity there with tremendous talent, which is phenomenal. But we're not innovating in isolation. We're working with industry leaders, consortiums, university professors who are doing advanced research. So we're bringing all of that to bear as we put our technology stack out that's 5 years out, so that our solutions can stay ahead, stay differentiated, and create value over the time frame. You might say, what are some key competencies of the company? Well, we have our own semiconductor fab. We've talked about that, which gives us unique capability, especially when it comes to higher frequency and millimeter wave or higher frequency or millimeter wave or wider bandwidth applications. We're able to create parts that give us the most differentiation and time to market advantage because of what we have in the company. We then put that together with partners such as Analog Devices and AMD, and use our system integration expertise to bring out the 10x performance improvement that our customers expect over and above what the device is capable of. So the types of performance that we can extract is a function of that system integration expertise that we have in the company. And our investments that we've been making as a company since we formed around software with our PathWave platform continues to pay rich dividends and is enabling more and more solutions to be built on a common fabric of software today than it's ever been. And there's plenty more of loom ahead to utilize our PathWave expertise. It's all about our first-to-market differentiated solutions to create greater value. And I would say we're focused on the richest opportunities in our end markets, and all the way from simulation to optimize. You've seen us be selective. At times, we've walked away from some parts of the market, such as with handset manufacturing test, to really focus on the R&D opportunity associated with the protocol layers. We'll continue to do active portfolio management to identify and select the best opportunities that create long-term value for our customers. And the combination of capabilities we have in the company with hardware and software and services gives us a distinctive advantage to solve customers' problems. And third, we maintain a high leverage in the solutions that are sold between our CSG groups and the EISG groups as well. So where's our focus? We want to expand our contribution to the R&D customer By doing so, we'll grow our software and services business. You'll hear more from Mark Wallace on the work we're doing there, and recurring revenue, making us more resilient over time. Probably an underappreciated part of our business is how durable our business is. I just love this chart because it tells the story of the portfolio. Look at the red piece of the graph, represents products and solutions that we have made prior to spin or at spin, 2013 and prior, still represent a material part of our revenue today. The second part of the chart I love is that the new innovations, the R&D investments that we've been pouring into the business to stay differentiated, give 50% or more of our revenues from products that we've launched in the last 5 years. The longevity of our platforms with our customer base is probably not a well-known attribute, but it is part of this durable fabric we have in our business, and it's a huge strength of the business as we move forward as well. And our customers, we have a large percentage of customers that do business with us every single year. All of this, and I'd say one of the key areas is capital allocation. And capital allocation has enabled us to create great value. It starts with our focus on organic growth. By taking up our R&D investment to 16%, we've been able to say yes to opportunities, execute on them, and we continue to stay disciplined, but we see that as the right level for sustaining the differentiation of the firm. Where we've been able to do M&A, you've seen us stay very disciplined with strategic and financial hurdles in place, and we've been able to do that and bring in best-in-class talent, capability, and cover the solutions workflow of our customers. And finally, we remain very confident in the free cash flow generation capability of the business. And so today, I'm happy to state that the Keysight Board of Directors has approved $1.5 billion of share repurchase authorization as we move forward. We also have a track record of bringing in capability which fits our strategy. You've seen us do that. We've done 10 deals all the way from spin to 2020. We've done 10 more deals from 2020 to 23. We focused our efforts, given the high valuation, on small technology tuck-ins that enhanced our ability to cover our customers' workflow. But here's the capabilities that we have built. We've integrated into our strategic process the ability to identify markets, do studies on them, identify specific targets, and then go ahead and figure out, how do we make the deal, and then how do we integrate those assets to extract value. So we have a strong activity system around this. But here's what I'll say about the most important part of it is, I will not do a deal, Neil and I are very aligned on this, we will not do a deal that does not give us a return that's greater than our weighted average cost of capital. We've always maintained that hurdle, and we will continue to do so. Our culture is a source of competitive advantage. You'll hear more about it. We have a very collaborative, supportive environment for our engineers to come in, thrive, and develop, but it's all about outcomes and results to customers. A great example is what our engineers did when we were hit by pandemic. They insisted on coming to the office and picking up their equipment and setting up their own labs in their garages so they could take care of their customers and their commitment. That's the commitment level we have in the company that we continue to foster and nurture on top of being innovative, which we have to, given the complex nature of applications we're involved in. And you see the recognition that we are gaining externally for the type of work environment we have, and we have very high retention rates when we bring people in from an M&A. People want to stay and integrate into the company. We have a strong, experienced senior leadership team that's here today, and I hope you get a chance to meet a number of them. And we intentionally shortened the presentation so you'll get a chance to hopefully mingle with us during the demos, and so we have an hour set up. But I'll say this about them. This is a great continuity for the company, that all of them have stayed with the company for so long. But equally, not only are they seasoned leaders and managers of their business, they're also thought leaders in their particular domains. And I hope you will get a chance to experience that as you speak to them. So in summary, I covered quite a bit. Keysight's in the strongest possible position it's been in, with very strong strategic direction, which we remain very confident in our ability to create value. Second, we see very favorable tailwinds in our end markets. I went through all of those earlier today. Given those two, we're raising our targets again. For growth to 5 to 7% revenue growth over the long term, operating profit 31 to 32%, and greater than 10% EPS growth, which is what we had already always committed to. I'll leave you by saying I'm really excited about the opportunities ahead of us and believe that we're well-positioned to capitalize on these decades-long opportunities to extend our value creation track record and compound value creation over time.